Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken. Our model portfolio is up 7.93% year to date as of September 9th, 2023. Here, our goal at SPY Trader Now is to beat the returns of the S&P 500 buy and hold investor. That portfolio is up 16.35%. We are only up just a little under 8%, so we are not meeting our goal. And I want to do that before the end of this calendar year. So that's where we currently reside. We do a simple portfolio where we purchase the ETF SPY symbol, or we do SPY options, or we're in cash. This is our current portfolio allocation. Here's some past returns for SPY Trader Now. Did really good in the last 3 years, especially in 2020, where we doubled the portfolio. Last week, the S&P 500 lost 1.26% for the week. We'll go through the charts in much greater detail later on. Last week, we made one trade. We sent that out on Friday, September 8th, and basically we rolled out our covered call, giving us some more premium for selling an option. We got 42-cent credit for that. And here are some of the trades in 2023. The active positions are in yellow. I put these in red because I did take a couple of losses. I got whipsawed, basically. First I did a call and then I did a put, and I ended up taking a loss of a few $100s on each position. I'm still positive in my portfolio. For the year. We start out the portfolio, by the way, each year with $100,000, and then we build from there. Here is our equity curve for the model portfolio for year-to-date 2023. This is the equity curve for the S&P 500 buy and hold investor 2023 year-to-date. And here are the two equity curves combined. Now I want my equity curve to be above the S&P buy and hold. So that's what I am trying to do. Here is the Fed Chair, Jerome Powell, and here are all your recent interest rate hikes and when they made them and how much they were for. The next Fed announcement by the FOMC is going to be on September 20th. We're a little less than 2 weeks away. The expectation is that we're going to skip, just like we did here on June 14th's announcement. Now we are looking at the presidential election cycle theory. Depending upon the year of the election, will give you historical rates of return. Currently, President Biden is in the third year of his election cycle, which puts that historically at 16.3%. Currently, the S&P buy and hold investor is at 16.35%, exactly at the historical average. Now we are looking at the bond market. The bond market is saying that equities are not a good place to be right now because we have an inverted yield curve and rising interest rates. Oh, by the way, everything that I'm showing you, there will be links for it in the description. So if you want to click on any of this information that I'm getting in this example, I got this from bankrate.com, but everything that I'm presenting, there'll be links down below if you want to explore this on your own. Now we are looking at valuations. According to current market valuation CMV, here's the link and down below, we are overvalued by 53.6% according to the average. On the PE, that puts us, pretty reasonably good overvaluation condition. On a chart on standard deviations, that puts us at 1.4 standard deviations. Definitely risk is in this market. Now we are looking at the Fear and Greed Index by CNN Business. Here's our friend Warren Buffett. Currently we're neutral. This market can go either way. Now we are looking at seasonality. Seasonality for the month of September. These are the summer doldrums. We are right now in the beginning of September. So we still have 2 more months of summer doldrums. We are expecting a pullback between now and the end of October. A reasonable pullback, 5 to 10% minimum. So right now for the month of September, we are currently down 1.07%. Now this is a long-term chart. These are monthly chart here, and we are going back 20 years for the S&P 500, and we are bullish on a long-term basis as long as we stay above this line and this line. Now we are looking at things on an intermediate term basis. This is a weekly candlestick chart going back 5 years of data. We are stuck in this trading range, and I wrote it down right here for you. Now we are looking at a short-term outlook. This is only going back 6 months. Daily candlestick chart. We were coming down, we broke out, we broke down, and now we appear to be kind of moving sideways. Why do I say that? Because, see this red line right here? And you see how we have a high there and a high there? Well, once we broke out above that, then this line here is going to have some type of a sticking. 2 days ago on Thursday, you saw where the market held that support level and bounced off of it. What it's going to do next week, it seems to me like we're going to have sideways action. It's going to take some energy to break down, and it's going to take some energy to break up. Eventually, one of those is going to happen, but right now, there's no way to determine exactly how it's going to happen. I have a red arrow here at the 420 level because that is where my in-the-money covered call strike price resides. So if this market were to correct all the way to 420, and then I was to buy to close my options, I would be making a nice handsome profit on those positions because I sold them at an elevated level. They lose money as they come down because they're calls. Now we are looking at a ratio chart, and we're monitoring this ratio chart very closely to help us determine when the next bull run is going to commence, because we are going to be taking on more long positions when that happens. But look what is happening now. Oh, by the way, this is a weekly chart. Right now, the MACD is getting ready to cross below its signal line. That is going to be a bearish move if that happens. We are watching this chart, watching to see what happens. Now, over here, we crossed below it, and then we jumped up and went above it. But crossing down below it is definitely going to create this chop. The S&P 500 normally weighted is in the blue. Right now, it is at this very elevated level. I would not be surprised to see a couple of weeks like this on the S&P 500, especially with this ratio chart going negative. Now we are looking at the VIX, which is the volatility index or the fear index. What am I seeing on this chart? This chart is supporting more sideways action. We are in a very low range, which is good for the bulls, and it doesn't look like it wants to break out. I see it moving sideways. So that means that the market is probably going to be moving either up or sideways with this chart that I'm looking at right now. Does not look negative. I don't see this glaring at me that the stock market, this is the black, by the way, the S&P 500 here is in black. I don't see the S&P 500, and the VIX works inversely. So if the VIX were to jump up like here to here, and then the S&P 500 comes down. I don't see that happening right now. I see the indecision here, and I see sideways movement here, and I see sideways movement here. Or possibly more up sideways to slightly up movement here in the S&P. Now we are on the Thinkorswim trading platform. 1 year chart, and we have standard deviations. +2, -2 in gold, +1, -1 in pink. The regression line is at a dashed green line. Where do we stand on a standard deviation? We stand at -0.1 on the 1 year chart, which means this thing can go in any direction. Now we are looking at a 6-month chart of the same chart. Where's the standard deviation lie? Well, it stands at -0.7. So 67%, 65 to 67% of all trading takes place between the +1 and -1. You see here, we bounced off of it and then stayed within that range. So if we come down, there's a 67%, 65 to 67% that this is going to be the bottom, and then it's going to start to creep up. Now, that's not a guarantee, but the odds are in your favor that we're close to a bottom in this next move, and then it's going to go up. We will see. Now we are looking at the same chart, but we are looking at a 3-month time frame. On this chart, the standard deviation is at negative 0.5, right there. So I put in a measured move there, which you see, we actually touched the 127 on the Fibonacci retracement, extension rather, and we never hit the 161. So there's not a lot of strength, otherwise we would have hit the 161.8. We did not hit it so far. So we're watching this. That is the presentation. Now comes the critical thinking. What do we do with that information from this presentation? September 9th, 2023, market summation, according to me, Ken, your host with SPY Trader Now, the market is moving sideways. I'm just going to sit tight with my in-the-money covered call, and I'm going to watch next week's action. Now, I put this also in last week's video, and I'm still expecting the same thing. Overall, I'm expecting weakness till the end of October, then strength till the end of December. That's my expectation. That doesn't mean it's actually going to happen, but I'm going to watch the market to see if it does. Meanwhile, I'm going to keep trying to beat the returns of the buy and hold investor before the end of this calendar year. That's going to wrap up this video. I hope you got some valuable information out of it. If you want to learn more about me, you can head over to spytradernow.com. If you have not done so already, please go ahead and hit that subscribe button, ring that bell to be notified when I post a new video, and smash that like button down. Thank you, and I wish you good trading.